single day I'm gonna make something great. That's my way.
Hi everybody. I am Ginger Wolf and welcome Stripped Finance. This video is for informational and entertainment purposes only. I am a feature entertainer and stripper, not a financial consultant. Please speak to your financial advisor about any financial matters. And with that out of the way, let's get into the video.
What is a mutual fund? A mutual fund is a financial vehicle that pools assets from shareholders to invest in securities like stocks, bonds, money market instruments, and other assets. Mutual funds are operated by professional money managers, who allocate the fund's assets and attempt to produce capital gains or income for the fund's investors. A mutual fund's portfolio is structured and maintained to match the investment objectives stated in its prospectus. Mutual funds give small or individual investors access to professionally managed portfolios of equities, bonds, and other securities. Each shareholder, therefore, participates proportionally in the gains or losses of the fund. Mutual funds invest in a vast number of securities, and performance is usually tracked as the change in the total market cap of the fund, derived by the aggregating performance of the underlying investments. Most mutual funds are part of larger investment companies such as Fidelity Investments, Vanguard, T. Rowe Price, and Oppenheimer. A mutual fund has a fund manager, sometimes called its investment advisor, who is legally obligated to work in the best interest of mutual fund shareholders. How are mutual funds priced? The value of the mutual fund depends on the performance of the securities in which it invests. When buying a unit or share of a mutual fund, an investor is buying the performance of its portfolio or, more precisely, a part of the portfolio's value. Investing in a share of a mutual fund is different from investing in shares of stock. Unlike stock, mutual fund shares do not give their holders any voting rights. A share of a mutual fund represents investments in many different stocks or other securities. The price of a mutual fund share is referred to as the net asset value, NAV, per share, sometimes expressed as NAVs. A fund's NAV is derived by dividing the total value of the securities in the portfolio by the total amount of shares outstanding. Outstanding shares are those held by all shareholders, institutional investors, and company officers or insiders. Mutual fund shares can typically be purchased or redeemed at the fund's current NAV, which doesn't fluctuate during market hours, but is settled at the end of each trading day. The price of a mutual fund is also updated when the NAV is settled. The average mutual fund holds different securities, which means mutual fund shareholders gain diversification. Consider an investor who buys only Google stock and relies on the success of the company's earnings. Because all of their dollars are tied to one company, gains and losses are dependent on the company's success. However, a mutual fund may hold Google in its portfolio where the gains and losses of just one stock are offset by gains and losses of other companies within the fund. How are returns calculated for mutual funds? When an investor buys Apple stock, they are buying partial ownership or a share of the company. Similarly, a mutual fund investor is buying partial ownership of the mutual fund and its assets. Investors typically earn a return from a mutual fund in three ways, usually on a quarterly or annual basis. Income is earned from dividends on stocks and interest on bonds held in the fund's portfolio and pays out nearly all of the income it receives over the year to fund owners in the form of a distribution. Funds often give investors a choice either to receive a check for distributions or to reinvest the earnings to purchase additional shares of the mutual fund. If the fund sells securities that have increased in price, the fund realizes a capital gain, which most funds also pass on to investors in a distribution. When the fund's shares increase in price, you can then sell your mutual fund shares for profit in the market. When researching the returns of a mutual fund, an investor will see total return, or the change in value, either up or down, of an investment over a specific period. This includes any interest, dividends, or capital gains the fund generated as well as the change in its market value over some time. In most cases, total returns are calculated for 1, 5, and 10-year periods as well as since the day the fund opened, or the inception date. Types of mutual funds. There are several types of mutual funds available for investment, though most mutual funds fall into one of four main categories, which include stock funds, money market funds, bond funds, and target date funds. Stock funds. As the name implies, this fund invests principally in equity or stocks. Within this group are various subcategories. Some equity funds are named for the size of the companies they invest in, small, medium, or large cap. Others are named by their investment approach, aggressive growth, income-oriented, value, and others. Equity funds are also categorized by whether they invest in domestic, U.S., stocks or foreign equities. Funds can be classified based on both the size of the companies, their market caps, and the growth prospects of the invested stocks. The term value fund refers to a style of investing that looks for high-quality, low-growth companies that are out of favor with the market. These companies are characterized by low price-to-earnings, PE, ratios, low price-to-book, PB, ratios, and high dividend yields. Conversely, growth funds look to companies that have had strong growth in earnings, sales, and cash flows. These companies typically have high PE ratios and do not pay dividends. A compromise between strict value and growth investment is a blend, which simply refers to companies that are neither value nor growth stocks and are classified as being somewhere in the middle. Large cap companies have high market capitalizations, with values over $10 billion. Market cap is derived by multiplying the share price by the number of shares outstanding. Large cap stocks are typically blue chip firms that are often recognizable by name. Small cap stocks refer to those stocks with a market cap ranging from $250 million to $2 billion. These smaller companies tend to be newer, riskier investments. Mid-cap stocks fill in the gap between small and large cap. A mutual fund may blend its strategy between investment style and company size. Bond funds. A mutual fund that generates a minimum return is part of the fixed income category. A fixed income mutual fund focuses on investments that pay a set rate of return, such as government bonds, corporate bonds, or other debt instruments. The fund portfolio generates interest income, which is passed on to the shareholders. Sometimes referred to as bond funds, these funds are often actively managed and seek to buy relatively undervalued bonds in order to sell them at a profit. These mutual funds are likely to pay higher returns, and bond funds aren't without risk. For example, a fund specializing in high-yield junk bonds is much riskier than a fund that invests in government securities. Because there are many different types of bonds, bond funds can vary dramatically depending on where they invest, and all bond funds are subject to interest rate risk. Index funds invest in stocks that correspond with a major market index such as the S&P 500 or the Dow Jones Industrial Average, This strategy requires less research from analysts and advisors, so there are fewer expenses passed on to shareholders, and these funds are often designed with cost-sensitive investors in mind. Balanced funds. Balanced funds invest in a hybrid of asset classes, whether stocks, bonds, money market instruments, or alternative investments. The objective of this fund, known as an asset allocation fund, is to reduce the risk of exposure across asset classes. Some funds are defined with a specific allocation strategy that is fixed, so the investor can have a predictable exposure to various asset classes. Other funds follow a strategy for dynamic allocation percentages to meet various investor objectives. This may include responding to market conditions, business cycle changes, or the changing phases of the investor's own life. The portfolio manager is commonly given the freedom to switch the ratio of asset classes as needed to maintain the integrity of the fund's stated strategy. Money market funds. The money market consists of safe, risk-free, short-term debt instruments, mostly government treasury bills. An investor will not earn substantial returns, but the principal is guaranteed. A typical return is a little more than the amount earned in a regular checking or savings account and a little less than the average certificate of deposit, CD. International/global funds. An international fund, or foreign fund, invests only in assets located outside an investor's home country. Global funds, however, can invest anywhere around the world. Their volatility often depends on the unique country's economy and political risks. However, These funds can be part of a well-balanced portfolio by increasing diversification, since the returns in foreign countries may be uncorrelated with returns at home. Specialty funds. Sector funds are targeted strategy funds aimed at specific sectors of the economy, such as financial, technology, or healthcare. Sector funds can be extremely volatile since the stocks in a given sector tend to be highly correlated with each other. Regional funds make it easier to focus on a specific geographic area of the world. This can mean focusing on a broader region or an individual country. Socially responsible funds, or ethical funds, invest only in companies that meet the criteria of certain guidelines or beliefs. For example, some socially responsible funds do not invest in sin industries such as tobacco, alcoholic beverages, weapons, or nuclear power. Other funds invest primarily in green technology, such as solar and wind power or recycling. Thank you for stopping by Stripped Finance. Your views on my channel are very special to me. I ask you to like, comment, share, and subscribe. As always, I am Ginger Wolf. Tomorrow I will be back with another financial video with the term stripped down just for you. Kisses.
Hello, I am Ginger Wolf and I am sacrificing your bad decisions to the financial fire. So don't forget to like, comment, share, and subscribe. I'll see you next time. Bye!